Hi, Eamonn. Thanks for coming
Hey,
to Investor Talk.
thank you very much for having me. I'm excited to be here.
Thank you. And thanks for your time. So let's start introducing yourself, if you like.
For sure. So my name's Eamonn Carey. I'm a general partner at Terra Ventures. Terra is a pre-seed and seed stage fund investing in the new Nordics, so the Baltics, Nordics, and a little bit beyond as well. We're a generalist fund, typically investing anything from 100 150k right up to 1.5 million into companies across a range of sectors. So we've invested in everything from future of retail, hardware, fintech, health tech, lots and lots of machine learning, consumer, HR, kind of you name it. We're interested in it. And prior to Terra, I was managing director at Techstars for several years, so running their programs here in London, where I'm based, and in New York prior to that, and then ran an angel syndicate fund with some friends as well. So in total, have invested now in close to 100 companies. I think 95 or 96 companies at this stage across Europe, US, Africa, and Asia, across a pretty broad range of sectors, and was a founder myself. So that was my kind of beginning in all of this, was starting my first company back in Ireland now 17 years ago, and kind of never looking back from that, enjoying it so much that now I live vicariously through other founders by investing in their businesses and trying to help out.
That has been a very long journey already.
Too long. I feel old every time I tell that story now.
It's a very long one. Thank you. I mean, this is where I met you. Yeah, for the accelerator. Yeah,
Yeah.
I remember well. You've been already saying no, the north, but exactly which area in geography do you prefer to invest?
Yeah, so we do deals. I mean, Estonia is where the fund is based. We'll also invest in Latvia, Lithuania, Finland, Sweden, Denmark, Poland, Czechia. So kind of around, I suppose, northern and eastern Europe. But the kind of home base of the fund is in Tallinn in Estonia, and obviously that's as markets go for creating great companies and creating unicorns, that one is pretty good and pretty well known. So I think it's quite a good part of the world to invest in. It's got a very well established ecosystem and lots of successful founders who've become very successful angel investors, and they've kind of got that flywheel that we see in Silicon Valley, that we see in Israel, that we see in the US, and increasingly now in London as well. I think Estonia has had that for the last decade or more.
That part of Europe is seriously taking off. Yeah, what do you think? Seriously taking off.
Yeah, I think the quality of deals that we've seen out of that part of the world, even when I was at Techstars or at the fund, was crazy. Quality of founders, the quality of angel investors, the knowledge that network has. We've been looking at a lot in Sweden recently, and I've genuinely been blown away by the quality of companies that I've seen coming out of there, and I think the same is exactly true in Finland, in Estonia, in Latvia, and I think that will only continue to grow. I think these ecosystems become almost kind of self-developing once you get into the first couple of unicorns, the first couple of exits, the first couple of founders turning into angel investors. They're the ones that invest in, they were the founder of a company, and then their first head of product leaves to start something new, and they become their first investor and bring a bunch of friends along. And that knowledge, that institutional knowledge, that empathy that angel network can bring is huge. And I think that's something that Estonia in particular has, and Sweden have leveraged really, really well.
Yeah, this is how the chain starts. How much do you normally invest?
Yeah, so we can. I mean, I think if we wanted to, we could go as low as 50k, but generally about 250k up to about 1.5 million euro into deals, and that's kind of first check, and then we reserve a portion for follow on into companies as well.
You invest pretty early. So where do you find which are the top concerns when it comes to invest in such an early stage? Where do you find conviction?
I think the thing that is most concerning, I guess, is are in many cases, particularly the kind of pre-seed deals that we do, there's not much proof and there's not a lot of traction. So you're then going on kind of who are the founders, why have they started this business, what is the knowledge or insight that they have that's going to give them an edge, or what's the network that they have that they can tap into, and then you kind of start digging into, well, what have they done to validate that this is actually a problem that requires the solution that they're proposing. And you'd be surprised how many founders we meet when we kind of say, oh well, you're telling us that your product is badly needed in the market, like, do you have any validation? How many people have you spoken to about this? And the number of them that say, well, we haven't really spoken to anyone, or we don't have any feedback, or we're just building and hoping that someone will want it. I think that's a pretty big red flag. So I think the one thing that founders can do, regardless of whether they're technical or sales oriented or whoever they are, is you should always talk to your potential customers, whether they be B2B or direct to consumer. You have to have some proof points, even at pre-seed stage, to say, I've spoken to 20 people. I heard this feedback. We know now that the MVP needs to be built in this way, and that's why I need your 500K to help us hire the team to build that. So you look for kind of founder market fit. You look for positive signals that they're really systematically approaching this business in the right way and thinking about it in the right way, that they've researched the area and the topic exhaustively, and that they're building a solid plan to build their product, hire their team, and make full use out of the capital that they're asking us for.
How important is face to face when it comes to investments? We are just trying to get out from the pandemic, where before was almost 90%, if not even more, face to face. Now we go to Zoom so easily. We even close deal to Zoom. But what's your point of view? How important is for you?
It's funny, right? I mean, before the pandemic happened, I think even in 2019, when I was at Techstars, and certainly when we were at the fund, we were making investments without ever meeting the founders. Everything had happened on Zoom. There are some companies I invested in 2020 and 21 where I still haven't met the founders. So for me, it's not a huge issue. It's more a nice to have, and it also sometimes depends on the circumstances. So, for example, when I was at the fund, we were doing smaller tickets in a larger number of companies, and so usually we were kind of coming in alongside a lead investor. We could kind of ask them for some of their diligence and details, and have conversations with them as well as the founder, and so that travel became maybe a little bit less of an issue. But I recently led a deal into a company in Finland, which was a larger kind of good seed round, and I got in a plane and went to Helsinki to spend time with the team, and some of the folks that they wanted to hire, and to kind of go to the office, get the full run through of the product, really chat through the roadmap, etc. Because in that case, we were leading a substantial round. I was going to join the board, and I wanted to make sure that I was 100% happy with the decision which I made based on our kind of initial Zoom interactions. B, that I got a chance to meet the rest of the team properly, again, rather than just like this. And C, and maybe more importantly, is that the team also got a chance to meet me. I think particularly if you lead investments into companies, if you lead rounds, if you take a board seat, it's quite a long-term commitment, right? Like the average marriage in the US, I think, lasts for 6 years, and the average time from pre-seed or seed to IPO is 10. So if I'm taking a board seat in a company at seed stage or pre-seed stage, I'm potentially getting married here, and the company is likewise is going to have a similar relationship with me. So I think from that perspective, if you're taking a lead on board, or if you've got if you're in the fortunate position that you've got 2 or 3 funds that are potentially interested in investing in you, the one big thing I always say to founders is they should do their diligence on me in exactly the same way that I do on them. And so going and meeting in person and having a dinner and just being able to build a personal relationship, to me, was important. Will it always have to happen? No. I mean, I'm very happy investing remotely, but I also I do. I mean, maybe I'm a little bit old fashioned. Like, I love being able to go for lunch or dinner or a glass of wine or a beer with the founders that I've backed, because of course we have a business relationship, and I'm an investor in their company. But I think after you go through that investment process and decision making process, you kind of almost choose each other. I think we have a personal relationship as well. And for me, as I mentioned, someone who used to be a founder, like the thing that's always guided me or driven me when I was starting to invest was like, I really want to be the type of investor that I would have loved to have had on my cap table. And so I think that's where that relationship part of things becomes important, and relationships are much easier to build when you're face to face, I think.
I do agree. Anyway, a drink together always helps.
I mean, there's nothing a glass of wine can't help.
I agree completely. How often do you like to meet the founders after you invested?
So I normally do weekly calls with the founders. So we normally have a standing 30-minute call every week, particularly, well, with these recent deals that I've led. For the most part, they're never actually 30 minutes every week. It's like 10 minutes or 15 minutes. Occasionally they'll be a little bit longer, but it's just a 30-minute slot that we both have in our calendar every week to go, tell me what's going on, what's gone well, what's gone badly, what can I help with? So I think that's important to have that kind of that check-in or that checkpoint. And even for, the portfolio companies that I've invested in with Techstars or as an angel or with the fund, I have a Calendly link that they all have access to where they can book a slot with me whenever they want. I have set times on every Monday and Friday to do kind of office hours with portfolio companies. So I think it's important to have those conversations again at the earliest stage of the business, which is typically where we're investing. Things can change day by day. Week by week is sometimes a very long time. So I think having that ongoing dialogue is important. And I'm always honest about it as well and say, look, if you don't have anything to say, don't feel like you have to give me 30 minutes. We don't have to talk about the weather. Take the time and reply to emails, and I'll happily do the same. And then generally, I think a kind of schedule of maybe 4 board meetings a year is a good thing to do. Ideally, if you can do 2 of them, I think going forward, I'd like to try and do 2 per year in person with companies if I can, and 2 remotely. And then, depending on the stage that the company is at, you can kind of do, a couple of check-ins in between those board meetings. Or, if a company is fundraising, we'll normally set up kind of weekly check-ins with the rest of the investors. So, again, I think for me, it's very important to be hands-on or to try and be hands-on if the founders want me to be. And I think the best way to figure out how I can be helpful is to kind of have a feeling for what's happening in the company. And that's why having those kind of weekly check-ins is kind of important, because then you hear things and go, oh, I can make this introduction, or you should talk to this other company that had this issue before. And I think that's quite important. And you don't get it without at least regular communication. And then I'm on WhatsApp with all of them as well. So I probably hear from them more often than I hear from my family.
Will you lead investments?
Yeah. So we really like to lead rounds. So happy to lead, happy to co-lead rounds with other funds, but we're quite high conviction. So for us to decide to make an investment, everyone has to agree. So all the partners, the whole team has to go yes. If one person says no, then that's a non-starter. And so for us to get to that high conviction, with a pre-seed or seed stage company, you're talking about a lot of calls, a lot of conversations, a lot of relationship building. And if we're going to make the decision to write a million or 1.5 million euro ticket into a company, then for us it's important to have that weekly call and conversation with companies, to be that lead investor, to hopefully be the person that can help them with the right network and knowledge and connections to give them a material chance of succeeding. And again, that was when I was thinking about what fund I wanted to join or what I wanted to do after Techstars, that ability to lead rounds, that desire to be kind of high conviction and the lead investor was something that was really, really attractive when I was thinking about Tara, and one of the big reasons I chose to join them.
I mean, when I met you was with Techstar. It was a networking event. I remember very well. And how important is networking today for startup, for venture capital? It's changing a lot.
I think it's important. I think your network is extremely important. Whether that be other investors, in many cases, actually, is really valuable to have other founders in your network who are maybe one or two rounds further ahead or further along to kind of get intel from, to have one or a couple that are your peers and who you can kind of moan about the process with, or kind of become therapists for one another. But I think also just being willing to and it's a hard thing to do, but to put yourself out there, and go and talk to potential clients or potential users, potential people that you can hire. I think it's an underrated skill, networking, and it's a very hard one to get good at. But if you can learn how to become very good at it and become very practiced at it, it's absolutely invaluable. And I've seen it deliver huge results and rewards for companies. Arguably, it's easier now as well because previously to network you would have to go to lots of events and hope that the right people were there. I think now you can kind of network digitally on Twitter, LinkedIn, email, etc. But there is still something. I go to an event in Riga to Tech Chill, the conference tomorrow, and the conference, the content, all of that side of things is interesting. But the part that I'm most excited about are the kind of networking events that will happen around the conference. So an opportunity to catch up with people I haven't seen for a couple of years, an opportunity to meet some folks from new funds and new co-investors, and I think for the startups that are attending, that should be the reason they're there. It's like, yeah, great, you'll get inspired by some of the content, but who knows who you're going to bump into if you go to this bar or this restaurant during the event. So I think it's definitely important for founders and for everyone in a company to be aware of the benefits of networking.
I do believe so. I'm a big fan of networking and have a very good network. Always help. You invest early, and what happens when the startup you invested in goes to the next round? Do you help them to introduce to follow-up investors, new investors?
Mm-hmm. Yeah, I mean, in many cases, we'd love to be the first money in. We can do small kind of angel style tickets into friends and family type rounds if people do them, or angel type rounds. So from my perspective, I certainly enjoy being in very, very early and kind of helping the evolution of the company and the product and the team and the go to market and much more. So where we can, we like to come in quite early. And then, when it comes to the next round, we generally reserve capital to invest in those companies when they get to that next round of funding. And so, again, we try to be supportive, and depending on the company, if it's a pre-seed company that's then going to raise a seed round, in some cases we might lead that as well. We might, stay involved. If it's a company that's going out and raising a Series A or a Series B, in many cases, yeah, we'll look to continue to participate and take our pro rata in that company, for example. But we're also, old enough and ugly enough to recognize that at a certain point, we're not the right people to, be on the board or be the lead investor anymore. You need to bring in, people who can take the company from 100 people to 1,000 or 2,000 or 3,000 people. And I think that's a very different skill set to the one that I have. And so generally, by the time companies get to kind of Series A, and certainly by the time they get to Series B, we're normally back to being maybe a board observer, and back to being kind of a supporter of the company rather than, directly day-to-day involved. Like, we're there if they want a therapy session or if they need help with something, but generally, there are companies who are far more experienced at getting, businesses from Series A to Series B or B to C, etc. And I would generally defer to them.
How do you expect your investments to help your portfolio? I mean, should they have some kind of interaction?
Yeah, I'm a big believer in this. I think one of the attributes that the Techstars programs have, and that accelerator programs, I should say, in general, YC 500, Expa, lots of others, that we don't talk about enough is you don't just get this great network of investors or this great network of corporates, you get this great network of other founders who you can learn from. And for the most part, all of our companies are going through relatively similar things. They're all pre-seed, seed, Series A. So it's tough for them to hire. It's, putting the mission and vision and values of the company together is challenging because it's not something they've done before. Growing a sales team or hiring a salesperson is really hard. And they can come and have that conversation with us as investors, or go and have that conversation with their advisors, etc. But I think sometimes founders need to talk to other founders just to sense check things, or to get an honest opinion or some solid feedback. And so for me, that network is really important. If I look at, the Techstars batches that I ran, in many cases, people who went through one program invested in companies that went through a program that happened later on. In many others, there are people who are advisors, both formal and informal, to companies who went through the program previously, and in some cases even people who helped out companies on the same cohort or same program as them. So I think it's really important for founders to network, because these are, all really smart, capable people. And the more that you can kind of get them to collide with one another and think about ways to help each other, I think the better the outcome is.
We've been talking about, almost this was the key word I've been listening every day during the pandemic: pivoting. But it's very complicated for founders to understand when is the right time to pivot, because many times they perceive pivoting like failure. What's your point of view here? And what happens if you invested in a startup, it's failed?
I mean, the sad reality is companies fail, right? Like, I have been fortunate enough to have companies that succeeded, and I have been, I would argue, fortunate enough to have companies that have failed as a founder as well. And certainly in my case, I learned an awful lot more from the companies that failed, because I can remember all the stuff that we did wrong. The ones that succeeded, I think, succeeded in spite of me. So part of the risk of being an investor is that, like, not every, as much as I want every company that I've invested in to be a massive success, the reality is that that's almost certainly not going to be the case. And so you have to be willing to take the highs with the lows as an investor, and be willing to kind of go, look, some of these are not going to work out. And you also have to then have an open mind. Like, I've had situations where companies have not worked out, where, I've kind of almost found myself being a recruitment consultant for the CEO or the CMO, and trying to kind of find them opportunities elsewhere in the portfolio, or get them connected into other people in the ecosystem. Because I think, particularly if we're investing at pre-seed, as an investor, you kind of have a duty of care to the founders that you invest in, that, yeah, if things go well, great, you're going to, hopefully make a bunch of money out of it. If things don't go well, you don't just drop them like a hot potato. Like, these are human beings that you should have liked enough if you're going to put money in. So you should try and, help them out if you can, and accept that failure happens. And that was hard. Like, when I started angel investing first, as I saw companies that were on a trajectory that looked like it was going to lead to failure, my temptation was to go, oh, I'll just be the CEO. I'll just come in and they need to do this, this, and this. And, I'm not, that's not my job. My job is not to run those companies. My job is to try and help as much as I can. But it's also to get out of their way and let them, go through that process and that journey themselves. So I think, when companies don't work out, you just have to kind of, deal with it as an investor, and try to be, nice about it. And, there are other companies and other founders where I've invested in them, their company hasn't worked out. And if they came back and asked me for money for a new business again, I would invest in them again. Because, for a lot of the founders that you meet, particularly at a very early stage, you're almost kind of saying, I don't know if this is the thing that's going to work for you, but I something will. You're a brilliant founder. Are you the brilliant founder of this business? Maybe, but you might need to go through a pivot, or you might need to fail in this business and start the next one before I can back you, and then you're successful. And then on pivoting, I'm generally, the way I kind of think about pivoting is like, either the market will tell you, or you need to be able to interpret data yourself to make a decision. I would much rather see companies kind of A/B test and play around the fringes of new ideas and pivots sooner rather than later. The classic case is always that you have a company where it's obvious things are not working out, and they wait until they have a month's worth of runway left, and then they say, "Oh, we've decided to do this, and now we need to raise a bridge round, or now we want to try and do something crazy." And at that point, it's really hard to help, right? Like if they come to you 6 months or 3 months in advance and go, "This isn't working, we need to try this," at least you can kind of go, "Okay, like if that's the case, here's an intro, here's a conversation you should have, here's something that you can do." So I think companies need to be conscious that pivots happen early and often, and again, it's not a sign of failure. It's a sign that you're listening to the market. And I think for a lot of people, they'd be surprised that even if they pivot a little bit, they're not necessarily moving away from the mission or vision that they're going after. The delivery mechanism or the process might be slightly different. So with pre-seed companies, I think they should be experimenting, they should be testing things out, and they should be pivoting, and they should be conscious enough of their own runway to make those decisions early enough for it to at least give them a chance of having a meaningful result.
Why did you become an investor?
There weren't many, if any, good ones around when I was starting my company. So there was no accelerator program, certainly not in Ireland in whatever 2005. But I will remember the people who were founders or were successful business people or folks that we wanted to work with, who took the time to have a coffee or a beer and kind of go, "Okay, do this, don't do that, don't work with this person, whatever you do, don't put this process in place," etc. And there's no way that I would be where I am now if it weren't for that advice and 10 minutes over coffee. And so for me, when I kind of met the Techstars guys and heard about their mentorship approach to running accelerators, that resonated. That idea of, I was like, holy shit, like I wish this had existed in 2005. I probably would have made a lot less of a mess of things. So getting involved in that felt very natural. And then the other big thing is, like, I haven't had an idea that I've kind of thought I'm going to drop everything and go and do this in the last couple of years. So this way, investing in companies, I kind of get to live vicariously through other founders and enjoy their experience and hopefully be helpful. But yeah, mostly it's just kind of going, hey, having seen the good, the bad, and the ugly of investors and the non-existent in my case back in Ireland, I kind of just want to be one that's helpful and useful and good, and the kind of investor that my portfolio companies would tell others, hey, if you're starting a company, the first person you call should be Eamonn.
You see so many startups, you invested in so many as well, but I think there is the critical point where you say, okay, I had to invest. So which are the critical points that really trigger ultimate, okay, I go? The gut, the feeling?
Yeah, partially. I mean, maybe a lot in some cases. So a chunk of it is you have conversations with the founder on Zoom or in person, and you try as much as you can to build up a picture of, what that person is like, what their personality is like. One of the most important questions for me is, like, why are you doing this business? Not what do you do or what your traction is, but like, what was it that motivated you to do this? Because if what motivated someone to do it is they read an article that said this was a big market where they might make a lot of money, right? That's tough versus someone who's like, oh my God, I was a lawyer every day, for 20 years and I had this problem over and over again. And so I started a company to solve it. So I think there's a bit of gut around that. I get excited about people's vision. Again, as a venture investor, we're looking to put $1 million into something today that'll be worth 100 million or $1 billion in 5 or 10 years time. And so I want people who go, here's where we are today, but here's this kind of big vision that's going to be hundreds of millions in revenue or hundreds of millions or billions of users. So I want people who've got an understanding of what the future needs to hold in order for them to be successful. I want to see evidence that the market actually wants this product, right? So customer love, customer feedback from potential clients. Certainly, in pre-seed, sometimes you have less of that because it's less available, but certainly in the seed deals that we've done recently, we have spent, a reasonable amount of time kind of talking to clients of some of the customers that we're working with and getting their feedback and using that to help us kind of make our decisions. So I think those are a lot of the factors that you take into account. And again, I'm fortunate to have, an amazing team of partners and associates and folks around me at Terra, where it's not just me kind of going, I think we should go in this direction. It's like a couple of other people meeting the company and coming back and saying, I think this is a challenge, or I think they're doing this well. Or we have cases where I've said, I don't see it with this deal. And, my partners have had to come back and go, okay, but, let me explain it to you. So I think it's that kind of passion, excitement, and engagement is probably the biggest. And then back it up with, do people really want this? And in the case of seed stage companies, you can tell that by the growth numbers or by the revenue numbers. And in pre-seed stages, you should be able to tell it by, at least some of the customer development and, market testing that the companies have done.
This is a question any funder would like to know, right? So what's the perfect recipe for a great pitch when they go to venture capitalists or angels?
I think, for me, I'd like to understand that there is a problem, right? And at least a little bit about the scale of that problem. Why are you as a founder uniquely qualified, or you or your team uniquely qualified to solve it? Then show me your product, right? Like don't show me, someone sent me a slide deck today that was like 25 pages of just kind of words and no shots of the product whatsoever. And you kind of go, well, I can't, I'm a maybe a visual person in general, so it's kind of nice to go, hey, you've articulated a problem, you said why you're qualified to deliver the solution. Now, like, show me it in action, show me that it's real, even if it's just some mock-ups. Show me that you've got a team, right? And I've invested in solo founders, but in all of those cases, they've kind of gone, hey, here are the first two people I'm going to hire, or here's how I'm going to kind of build out my engineering team as a solo founder. Those are the things that are, and for me, then show me what that vision is, right? Like, if we're serious about investing in you, we'll ask about the competition, we'll ask about the market, we'll ask about all of those things. But like, wow me with the vision, right? Make me, I always say the thing that companies get wrong with pitching is they don't realize what a pitch is, right? It's kind of like a movie trailer, right? Like the Star Wars, The Force Awakens, I think is still the best movie trailer, certainly of my lifetime, not just because I'm a Star Wars fan, but they did such a good job of building the kind of anticipation and the soundtrack and the sounds and the characters and the people that you saw. And I remember seeing that for the first time and going, I will pay any amount of money to go and see that movie right now. And that's what I should feel when I see a company pitching on stage at an event, or when I'm in an elevator and they're pitching to me. I should be saying, I need to cancel the next 10 meetings in my diary so I can spend an hour with this company. Like, I really, like, get me excited. That's the biggest thing. And too many companies think that what they need to do is like dazzle me with their technical brilliance. And what that ends up doing is kind of boring me instead of getting me excited about a topic. So yeah, that's a long-winded way of saying, like, sell the sizzle a little bit every so often.
How startup founders, modern startups, should approaching a venture capitalist? For example, cold emails can work.
Yeah. I mean, I invested in Nikki and Leah, the founders of On, off the back of a cold email that they sent. In fact, a cold message on LinkedIn that led to a cold email. In their case, they were very systematic, right? And this is advice I gave everyone on Techstars and give everyone who asks me now. They had done their research on me, and I'm not saying they'd done hours of research. Like, they probably looked me up and spent 10 minutes kind of going, oh, okay, these are the types of companies he's invested in. This is some of the stuff he's blogged about or talked about in the past. Like, we can personalize the message a little bit. The majority of cold emails that I get from companies, it's a mail merge, right? So I know that they've, scraped some list off the internet or bought one. They've sent an email to me and 1,000 other people. And it's lazy, right? Like, that's really lazy. And if you'll do that to, if you're asking me for €1 million to fund your business and you can't even spend 5 minutes doing a little bit of research about me, that's not a good sign. And that's not ego. That's me going, if this is how you treat fundraising, how are you going to treat your clients? How are you going to treat your business processes? How systematic and structured are you going to be when it comes to approaching, if you were trying to sell into Unilever or Lloyd's, if you're just going to mail merge them and everyone else, you're not going to have a very successful business. It's kind of a, as I say, a lazy way of doing it. So I think if you're going to do cold emails, like have a look on Grit, gritt.io, have a look on openvc.app, have a look on Equity Match, have a look on various different places where you can kind of go, okay, who are the, again, if you are raising a Series B or a Series C for, your flying car company in San Francisco, and you email me asking me for money in it, that's kind of lazy. Like you could look at our website and find out that that's not the stage or geography that we invest in. So I think you just need to do a little bit of research and kind of go, if you're asking these people for a material amount of money, then like let them see how good you are early on. Don't leave them with an impression that you've just been very lazy. And then the other thing is like learn how to send short emails, right? Like don't. The majority of LinkedIn messages I get are like 10 or 15 paragraphs, and I'm just not going to read it. Like send me 2 lines or 3 lines. Hey, loved your article about X. Relates to what we're doing with my company. I saw you invest in Estonia. That's where we're based. Can I tell you more? 100% of the time I'm going to read that email, depending on the company or the deck you share, 90-ish% of the time I'm going to reply. Maybe even all the time I'm going to reply. Whereas if you're just like, dear investor, and again, I get this, like, dear investor, we are raising a pre-seed round of, $1 million, and then like 20 paragraphs of text afterwards. And then at the end, you're like, oh, they're in, whatever, outer Mongolia. And therefore I'm, even if the idea was brilliant, I can't invest. So, be short, be to the point, and be systematic and structured in how you do things, because I will look at that as a reflection of how you will approach hiring, how you will approach sales, how you will approach the next round of fundraising that you do. And if you half-ass it, then, that's a poor reflection on the rest of your business activities.
I do agree. How important is the IP to belong to the startup for you to invest in?
It helps. It helps, but I wouldn't say it's essential. I see a lot of early stage companies thinking a lot or spending a lot of money on trademarks or on patent protection and various different things. And depending on the type of company, it can be, at least somewhat valuable to have some of it. And it's certainly something that we would probably look at in due diligence, but I wouldn't say it's a must have. Like, yes, if you're a deep tech company, and you're trying to do something interesting, then you will probably have some proprietary algorithms, but then you can't patent them, right? So, so I think it's helpful to understand what IP you have and what's protectable and what's worth protecting. But it's by no means a must have. But then there are other funds who, for whom it is. For me personally, at pre-seed stage, like, a lot of stuff is kind of cobbled together with glue and Pritt stick and shiny objects on the fringes so that you get distracted. As you get further and further down the road, it becomes more important. I mean, IP assignment, if you have contractors working for you, is important, but I would rather a company had customers than patents in the early stages, because we can ask, what are you going to do about the patents further down the line when you have, you can spend my money on getting a patent as an investor rather than spending your money on it. Spend your money on getting people who will actually buy your products.
Let me close with, what will be the best and most promising sector for founders to start their venture in the coming years?
I think there's a lot of big challenges coming down the pipe, that we can all see, both from kind of climate and energy perspective. There's a lot of interesting stuff going on. We have 7 billion plus people heading towards 8 billion people on this planet. We've got to figure out how to feed all of them, particularly in light of what's happening in Ukraine and Russia. So I think food tech is very exciting, both what we eat, how we eat it, where we grow it, how we grow it, etc. We have numerous countries around the world, including this one, where people are thankfully living a lot longer, but there are not as many I meet a lot of people building products for 16-year-olds who have no money. I don't meet a lot of people building products for 60-year-olds who own their own houses and have retirement funds and have worked with tablets and phones and computers for most of their adult life. So I think population aging, there's some really interesting stuff happening there, and I think there are big opportunities around the future of entertainment and future of retail. When I think about the experience of going into a shop versus the experience of buying on Amazon, they're two very different things, and how do you marry that up? Or when I think about how I have a 1-year-old, how he's going to play video games in 10 years time versus how I played video games 20 or 30 years ago. I think that metaverse kind of VR world is poised for explosive growth, and there'll be a lot of really interesting stuff happening in that space as a result. So I think and listen, we're still relatively early, I think, in terms of ed tech and insure tech and health and lots of other areas. So I think sometimes founders go through periods of going, oh, all the good company ideas have been done. And that's like music, right? It's like were all the good songs written in the 1960s? Maybe the chord progressions were written hundreds of years ago, but you just have to think about new ways of forking it and doing something interesting on top of it. So I think there's huge opportunities. And one of the reasons I'm still excited to be involved in venture is getting a front row seat to the crazy ideas and amazing things that will be what's a crazy idea today, but will be a kind of a verb that we all use in 5 or 10 years time. That's the joy of this job.
Yeah, I do believe it's the most beautiful part of being a venture capitalist. Eamonn, thank you so much for coming to the Investor Talk. It's been a
thank you for having me.
Thank you for your time. Take care.